Hi, Traders, it's Alberto, and this is another Pro Traders Workshop series continuation tutorial. First things first, upcoming Forex seminar and live trading workshop. Washington, D.C. will be held January 26th through the 28th of 2017, and it will be at the Hilton Hotel in Crystal City, which is very near the Reagan International Airport. That's where you would be flying in if you're from out of town. So if you are interested, just go to my website, to the contact page, and you can email me and ask for details. And it's going to be extremely affordable. It's a 3-day event, probably the cheapest Forex seminar you encounter. So let's get started. Been getting quite a few emails on some confusion about top-down analysis, where to enter trades, how long to stay in a trade. So the only thing I can, first off, the only thing I can tell you is that it usually takes a lot of experience to be able to have a gut feeling as to where the market is heading and when to enter. That said, the purpose of these YouTube videos is to help you have some basic understanding of overall direction of the markets, and to be able to take a trade, specifically, specific areas rather. That takes practice, it takes experience, it takes obviously a few tools, but I'm going to try to explain that in this video. So the first thing I do is that I'm looking for, obviously, directional bias. What is the market doing? Is it consolidating? Is it in an uptrend? Is it in a downtrend? So I'll look at different time frames. So the first time frame I'll look is the 1-hour chart. Now the New Zealand dollar has been in a downtrend for the past 3 days. And so what we should be looking for is lower lows. Okay, this is very important, and it's something that many traders struggle with. They're not sure if the market's in a downtrend or an uptrend. If it's consolidating, you're not going to have lower lows. You're going to have this kind of pattern here where there's no highs or lows. But as long as the market has higher highs and higher lows, it's in an uptrend. As long as it has lower lows and lower highs, we're in a downtrend. So I'll look at the 1-hour chart, and I notice that the market had been, so let's say we're looking at this, we don't even see what's happening. Then it's obvious that it broke a swing point. Then on the 1-hour chart, we know we're in a downtrend, even if it's just this particular day. And notice that each day the market's lower, it's going lower. And we have lower lows here and then lower lows here. So we're still in a downtrend. So the next thing I look is the 4-hour chart. And I notice that on the 4-hour chart as well. Let me just move this announcement over here. 4-hour chart and 1-hour chart basically are mirroring each other. Okay, so that's how you can tell if the market's in an uptrend or downtrend. On the New Zealand dollar for the past 3 days, we have been in a strong downtrend. Now we're hitting a previous support level coming into Monday, so that's why this would be a good Monday retracement trade. Of course, obviously, if it closes below the support, then we're not going to have a Monday retracement. We'll probably continue to sell off. Okay, so again, looking at the 1-hour chart, lower lows, lower highs, swing points. These are fractals, these peaks here. This is how you can tell if the market's in an uptrend or a downtrend. And these are trades that I normally am very aggressive. I'm looking for entries. The line that you see here is a 36 moving average line. So the rule is you can use a 20 or 36. I like using 20 or 36 moving average line. And the rule is if price is above this 36 moving average line, then you don't want to be taking a trade to the downside. But as long as price is bouncing off the 36, then you're safe to take a trade. And if it closes above the 36, then it's time to get out of the trade because that's most likely going to turn around. Also, what I look for is the angle of the moving average line. So as long as the moving average line is angled to the downside, then I know it's safe to sell. But I have to find an entry level because you don't want to be taking a trade at a swing low. You want to wait for the market to retrace before you can sell. Wait for a retracement before it sells. And the closer it is to the 36 moving average line, that's an area that I would be looking to go short. So for example, right now, it's too far away from the 36 moving average line, so this would not be an ideal setup to enter a short. And it would be actually risky if you took a trade, even if it broke the support level, because it's so far away from the moving average line. So, okay, so the market sold off. You notice that the market rallied. There's that retracement, and this would be an ideal place to sell. And the market sells off, but you don't want to necessarily be taking a trade down here, even though you know you're in a downtrend. And wait for that retracement, close to that moving average line. Look for candlestick patterns. Here we have like an evening star, so this would be a great area to sell. And there you have it. It's just the simplest way I can explain how to determine directional bias, just using a moving average line. Make sure that it's angled to the downside or upside, because that's when you know the market is trending. When to avoid the market is when these moving average lines are not angled at all, they're flat. And here it is a little bit angled to the upside, but still is a little bit risky because it's not. Here we had a higher high, the market was in an uptrend, but we didn't know until it broke the swing high that it was going to continue to go north. Here it's a lot easier because the moving average line is slanted going up. So each day was the market rallied, came back down to support, rallied, came back down to the support. 36 moving average line rallied, came back down, broke the support, that 36, but managed to close above, and we were still in an uptrend. And then everything changed when the market broke below this level, and then we were in a downtrend. New Zealand dollar. Here's another trade setup on pound New Zealand dollar, where we have price breaking above this 36 moving average line, and essentially there had been a change in direction. So if you use a trend line, notice that this channel had been breached, so we're not in a downtrend any longer, we're in an uptrend. So market rallied, came back down to the 36 moving average line, and this would be the ideal area to look for trade setups. And market rally, came back down to the 36 moving average line again, and there's your rally. Now this is difficult because you're waiting for some sort of retracement so you can buy, but market on Friday did not do that. Just came back down a little bit, and as long as it's the market, this 36 moving average line is angled up, then it's safe to take a trade. If in fact it comes back down to the moving average line, then it's just another opportunity to take another short, long position. Or you can wait for this consolidation period to end and take that breakout trade to the upside. And that's exactly what I did, because coming into the New York session, this was, I know the market's in an uptrend, it has not retraced as much as I would like to have, but I just highlighted this consolidation area, and as long as it breaks, and I can break this rule of waiting for the market to come back down to a moving average line to enter a trade, as long as it breaks this consolidation, then that would be a valid entry and the market put in 248 pips within a matter of 6 or 7 hours, or even more than that. But anyway, this was the Asian session. So again, this could be a lot easier if you just determine directional bias looking at a 4-hour and 1-hour chart. And let's look at the 4-hour chart on this pair. And obvious, on a 4-hour chart, the market's clearly in an uptrend based on the angle of the moving average line, the MACD indicator as well. If you do use MACD indicator, angle and separation on MACD, the two lines crossing the zero line, is also a strong indicator. There are so many different tools that you can use to help you determine directional bias. But for me, the most important is the candlesticks. As long as I see higher highs and higher lows, then I know that the market continues to go north. And coming into a new week, then that should continue. This uptrend should continue in pound New Zealand dollar. But we do have Monday retracement, which we normally do take. So that's it for this tutorial. And again, if you're interested in the workshop, live workshop, we're going to be trading live when the markets are open. Just shoot me an email. Thanks for watching the video. Have a good weekend. Talk to you guys.